Hi, good morning. My name is Kaysian Gordon from Casey Gordon Financial Planning. And this morning, I wanted to talk to you about another topic, why you should stay invested in the stock market. And the reason this topic came up was yesterday I got a notification from Yahoo Finance, as I typically do at the end of the day. The notification said that both the S&P and Dow are at their high points since 2022. So since last year. If you pay attention to the markets, last year was a pretty bad down year for both stocks and bonds. And if you had a 60-40, so 60% equities and 40% bonds, last year, your portfolio would have been easily down about 20%. And I know that would have made a lot of investors very nervous and some wanting to come out of it because they did not want to endure some of the risk. But I want to remind you of why it's important to remain invested. So even though the markets went down last year, this year it kind of creeped back up. Sometimes it did not feel like it was going a whole lot of up. Sometimes it felt like it was going sideways or down if you were paying close attention. But people are starting to see the benefits of having remained in the stock market, even though it might not have felt good at the time when it was going down. Oftentimes, when we hear a lot about the stock markets, it's when it's been going up and has been going up for a long time that I'd say more of the novice investors want to jump in because the markets are hot, everything's hot. That's not necessarily the time to always want to jump in. The time to want to jump in is when it feels uncomfortable to get in, uncomfortable to start buying stocks, because that's when stocks are typically being sold at a discount. So a discount compared to what the normal price is or where prices were in the past. That's when it's better because you have now of a better opportunity for the investments to grow over time. And I want to share one of my favorite charts. I actually gave this out to my clients this year, showing the days versus the decades, and you choosing which one you want to focus on. I know sometimes in the day-to-day, it's kind of hard not to pay attention to what's going on in the markets or even in our financial lives, right? But over time, what we can see is that when we look back, typically over the decades, that we will see things even out, and all we can see is the line moving higher over time. Again, investing is for the long-term play. It's not for needing the money next week. I don't encourage you to try to get into the markets and to beat the asset markets and try to get rich quick. Investing is a slow and steady process over time. And I know that when we look at it as an over the long-term situation, we can end up doing pretty okay. But again, patience is rewarded when you are investing in the stock market. So please continue to be patient with your investments, remain invested, and at times when it feels the most uncomfortable to jump in, that may be a good time. Again, this is not specific investment advice. This is just general education so that you can think of when best to take opportunities. And again, if you need a financial professional to look over your investments and to give you guidance as to whether you're choosing and I'll put it in quotes, right things, or choosing the investments for you that will grow potentially over time, I'm happy to help you and to educate you along the way. My name is Kaysian Gordon from Casey Gordon Financial Planning, and I look forward to talking to you in the next video. Talk to you soon. Bye.